Welcome back to U.S. Farm Report. Jim McCormick and John Heinberg are joining us this weekend. We talked the first half of the show about how these markets really aren't trading the fundamentals. We've seen massive fund liquidation. One fundamental thing that we're looking at, though, coming up here, the Tuesday WASDE report. Let's talk about that. And what are we expecting? Will we see that lower soybean acreage number mean a bullish number there in terms of ending stocks, Jim?
I think you will see the bean number is probably going to be the big surprise. They got to make an adjustment for that acreage number that came out in June. So when they make that adjustment, that will drop the carryout below 200 million without a demand revision. So we do anticipate what they'll do is try to offset that. They'll cut demand a little bit and pretty much put this carryout, Michelle, right a little bit around 200 million, 205 million, which is pretty much unchanged year on year. Now, where that gets really tricky is, can we manage a 51.5 bushel yield to keep that going? Because if we don't see that yield, then all of a sudden you really got to get into demand rationing mode, we believe, if that yield would start to slip. On the corn side of the equation, not a lot of surprises on the quarterly grain stock report as well as the acreage. So we don't look for a huge revision on the corn side, but it's something we need to keep an eye on. You know, the balance sheet's working with a 177 trend yield. That's a record yield. If this heat starts to really hit in, as we mentioned in the first segment, going into the middle part of July, pollination starts taking a toll. These yields fall 4 or 5 bushels. The corn carryout project could easily fall below 1 billion bushels, and that would have the market having to move back into a rationing mode, especially if you can't get this grain out of the Ukraine.
Well, John, it looked like we didn't really trade the acreage and quarterly stocks report that day. Do we actually trade the report on Tuesday here? And what about the August report when we start figuring in some of these lower acres and the resurveying?
Yeah, that's going to be the interesting part of that. And, you know, what Jim was mentioning too with that soybean market, you know, do we put those acres in from the green or the acreage report? And, you know, it is going to tighten up that balance sheet. You know, we start talking 200 million bushels at this time frame with a potential warmer forecast in front of us, you know, some weather concerns. The market may do that. Now, again, do they believe the numbers? What's the estimates going to be down the road? You know, that may be a little bit of a limiting factor just until we get confirmation on the acreage number from the, you know, from that resurvey. So to me, you know, again, right now the whole move after the acreage report came out was more on that technical side, fund liquidation, end of the month, end of the quarter type trade with follow through after the 4th. So now maybe we'll see those numbers and maybe realize that things are still extremely tight, especially in that soybean market, you know, with potential weather in front of us.
So if we believe the highs are in for the year, what do we do for marketing if you missed it, Jim?
Well, I think you got to just prepare to, you know, what you need to do is kind of recalibrate your thinking. The reality is the highs are in, but the profit levels are still very, very well, especially compared to historical numbers. You're still looking at corn over $6. So I think what you got to do is recalibrate what your pricing are, get a better handle where you think your yields are, and redo the math. And I think you'll be pleasantly surprised. Yes, they're off the highs, but the profitability is there and you need to take advantage of it. The reality is the economy is slowing down. Right. And demand eventually is going to slow down. If we end up with a big crop in South America, no matter what our crop does, we're probably going to see this market end up working lower. History tells us, Michelle, when we have big surges like this, it usually tends to put in multiple year highs. We're encouraging people to even take a serious look into 2023 crops because you know, history says that they won't take out their highs as well.
John, what about the livestock sector? Cattle, cash up into 7-year highs, but can the board and cash continue to advance here with the recessionary fears?
You know, that's a major headwind over top the market. And in terms of the cattle sector overall, you know, you got cash still trade above the board at this time frame. Board's trying to at least kind of hang in there. But again, it just feels like the speculative money doesn't want to reach out here because of those recessionary fears and what we can have down the road. You know, I'm still long-term friendly to the cattle market. The numbers continue to prove that. Cow slaughter continues to run at well above average paces. That's just again tightening up the supply. We're starting to see some of that impact even in the current cash trade in the cash market now between the difference between the north and the south. You know, so at least at this time frame, you know, we're working maybe to our typical summer high here in this window. You know, we still got a lot of cattle here in front of us overall. Weights are down. The weather might be another factor to help out with that if it does turn hotter again across cattle country. But at this time frame, yeah, the board still feels like it's not quite where it needs to be, at least in terms of value compared to what we're seeing in the cash market for both lives and feeders.
John Heinberg, Jim McCormick, thanks so much for your insight this week. More U.S. Farm Report coming up.